Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within company filings. And get ready, because today we're diving into Professional Diversity Network, Incorporated's latest report. And let's just say things are getting interesting with some new deals. And to focus on the future, we'll decode it all for you before we jump in. If you are looking for straightforward breakdowns of complex corporate news, make sure you hit that subscribe button and notifications are on so you don't miss out. We also have a fantastic Discord community linked in the description where we discuss these filings and much more. Come join the conversation. Alright, let's get straight into it. Professional Diversity Network, Incorporated, better known by its ticker symbol ipdn on the Nasdaq, has just filed a current report and 8K filing, which typically means something significant has happened. This filing is really about a new agreement the company has entered into, and it hints at their future direction. So the big news here is that on the 27th of November of 2025, the company signed a consultancy agreement with a company called Deep Trade Pty Ltd. Now, Deep Trade Pty Ltd is described as a non-affiliated accredited investor. What is an accredited investor, you ask? Basically, it is someone who is considered financially sophisticated enough to invest in certain deals without the same level of protection as a typical everyday investor. This is a common way for companies to engage with specialized partners. The core of this agreement is about professional consultancy services, and the focus is pretty exciting. They're looking to expand into Web 3.0 digital assets and a real-world asset platform. This tells us that ipdn is not just sticking to its current business model, but is actively trying to innovate and move into what are considered the next frontiers of technology and finance. Think of it like this: Web 3.0 is the next evolution of the internet, often associated with decentralization and blockchain technology, and digital assets are things like cryptocurrencies and NFTs. Real-world assets on a platform could mean tokenizing things like real estate or other physical items, making them easier to trade. Now, for this expert advice and strategic planning, ipdn has agreed to compensate Deep Trade Pty Ltd with a total of $1.616 million. This is not a small amount and indicates the seriousness of this expansion plan. The interesting part about the payment is how it can be made. It is flexible. It can be cash shares of ipdn as common stock, or a mix of both. In this particular deal, the company's board of directors decided to pay this consultancy fee by issuing 898,000 shares of their common stock. This is a significant chunk of shares, and it is important to note that this issuance is subject to Nasdaq's listing rules. Also, they are using exemptions from registration under the Securities Act, which essentially means they're relying on certain legal pathways to issue these shares without having to go through a full public registration process, which can be lengthy and expensive. This section basically confirms the details we just discussed about issuing those shares without registration. It is crucial for investors to understand these unregistered sales, as they can dilute the ownership percentage of existing shareholders, because more shares are now in circulation. While the company is using legal exemptions here, it is always something to keep an eye on how much equity is being issued this way. The company is also clarifying this announcement is not an offer to sell or a solicitation to buy these shares. Rather, it is just reporting on a transaction that has already occurred. Now, as with most filings like this, the document includes forward-looking statements. These are essentially educated guesses or projections about the future. They can talk about things like potential share issuances or expected outcomes. The company is legally required to state that these are not guarantees, and actual results could be very different due to various risks and uncertainties. They are based on current estimates and assumptions, and the company explicitly states they have no obligation to update these statements if things change. This is standard legal sire protecting them from future lawsuits if their projections don't pan out. This final section is where they list the exhibits attached to the filing. The most important one for us is Exhibit 10.1, which is the full consultancy agreement we've been talking about. They also list the interactive data file for their cover page, which is more for regulatory compliance. So let's break down what this all means. ipdn is making a strategic pivot. They're investing a substantial amount, $1.6 million effectively, into exploring and expanding into the rapidly growing fields of Web 3.0 digital assets and tokenized real-world assets. This is a bold move. Companies that embrace new technologies early can position themselves for significant growth, but it also comes with considerable risk. This expansion into Web 3.0 and digital assets is a bet on the future. It is a sign that the company wants to stay relevant and tap into new revenue streams in a rapidly evolving digital landscape. The payment in stock rather than cash could be a way for the company to conserve its cash reserves while still bringing in valuable expertise. However, issuing a large number of shares without a full registration can dilute existing shareholders' value, so it is a trade-off. It is a signal that they believe in the long-term value of these new ventures enough to stake their company's stock in it. Now, looking at this from a higher level IPDN is essentially saying they are serious about innovation. The consultancy agreement is a handshake, with expertise suggesting they may not have all the internal know-how for this complex transition. This is a typical strategy for companies entering uncharted territory. They bring in specialists. The risk here is that these new ventures are inherently volatile and unproven. Web 3.0 and digital assets are still nascent and regulatory landscapes are constantly changing. A misstep here could be costly. However, the opportunity is also significant. If IPDN can successfully navigate these new markets, they could unlock substantial growth potential and create new avenues for revenue that were not previously available. It shows a proactive approach to business development rather than resting on their laurels. Their competitors are likely also eyeing these same emerging markets, so moving decisively, though carefully, is probably the right strategy. To sum it up, IPDN is charting a course into the future with a significant investment in Web 3.0 and digital assets. This is a strategic move that shows ambition and a willingness to innovate. The use of stock for payment and unregistered sales are important considerations for existing investors. While the path ahead is likely to be challenging with inherent risks in these new technologies, the potential rewards could be substantial if they execute their strategy effectively. It is a company that is clearly not afraid to take calculated risks to secure future growth. What is your take on IPDN S-Bold move into Web 3.0 and digital assets? Do you think this is a smart bet or a risky gamble? Let us know your thoughts in the comments below. If you found this decode valuable, please give this video a thumbs up and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community linked in the description for more exclusive insights and discussions. Thanks for watching, and we'll see you in the next one.